Good evening, viewers. My name is Imran. I'm a UK and international tax specialist. So the purpose of this video to explain to viewers the income tax payment dates, penalties, and the interest. So we know all of us that the payment of taxes is due by 31st of January following the end of the tax year. However, if you come across with some phenomena or some terminology on your tax return, the payment on accounts. So this usually happen if your tax liability or unpaid tax is more than £1,000. So then you will see that when you get your tax return, the HMRC requires you to make a payment on account. Now, how does this payment on account work? Okay, this topic is highly tested with ACCA, ACA and CTA exam. Also helpful for individual to understand how the taxes work in the UK. So payment of tax. Tax for a tax year is paid in two stages. The first payment on account is made on 31st of January in the relevant tax year, and the second is made on 31st of July, which is 6 months after the first payment on account, so following the tax year. So for the tax year 2023 and 24, the first payment on account is made on 31st of January 2024, and the second payment is made 6 months later or after on 31st of July 2024. How does it calculated is the payment of taxes. Each payment on account for a tax year is 50% of the tax due for the previous tax year. So when calculating the payment due for 2023 and 24, we look back to 2022 and 23. So if in 2022-23, if you have unpaid tax of, say for instance, 5,000, you will pay this 5,000. Then if you never face this payment on account issue in your tax return and it's first time, so you will pay the 5,000. However, as your tax liability is more than 1,000, HMRC would require you to pay payment on account for the following year. So the way it's work is you will divide this 5,000 divided by 2, so that the result will be 2,500. So the first 2,500 you will pay along on the same date for 2022 and 23, and the remaining would be after 6 months. So the payment on account are made in respect of income tax. No payment on accounts are required in respect of capital gain tax. So CGT is paid lump sum on 31st of January. Here's example. Simon, an individual, so he has income tax liability. He filed his tax return. So then for 2021-22, his income tax liability is 15,000. However, maybe he was working with some as an employee, so the employer deducted tax of 8,000. And then 2022-23, his tax liability is 18,000, and the PAYE deduction is 10,000. So for each year, for 1 year, the tax due is 7,000. For the other year is 8,000. He also has a CGT due of 2,000 for which in 1 year and 3,000 for another year. So what's happened is now when he submitted the return for 2021-22, and obviously the deadline was 31st of January 2023. So the unpaid tax was 7,000, as you can see from the slide. So he will pay that 7,000. Then half of this he will pay on the same date, so it is 3,500. The remaining half he will pay on 31st of July 2023. Why? Because his tax liability is more than 1,000, so he required to make upfront payment for the following year. So the following year is 2022-23 in our case. So it means is when he's paying taxes for 2022-23, he already paid tax in advance of that 7,000. He need to make sure we deduct this one. Okay, so you can see on the following slide. So for 2022-23, income tax due is 8,000, CGT is 3,000, so the total taxes is 11,000. Because of the payment on account system, he already paid in advance 7,000. That 7,000 was based on the previous year, as we say, 2 payments he made. So his tax liability remaining is 4,000. So when you're advising Simon, you can't just simply say pay this 4,000. No, because of the payment on account issue, he will pay that 4,000. But because of the income tax liability again for this year, the unpaid tax is 8,000. So he will require, based on that, he will require to pay payment on account for the following year. So it means unpaid tax was 8,000 for this year. So he need to make a 2 payment of 4,000 each for the following year. So one will be due on 31st of January 2024. The other one will be due on 31st of July 2024. That's how it's worked. So each time it's rolling, keep rolling. So the purpose is like HMRC secure the payment of the taxes in advance. Even after that, you can leave this country, it's fine. So HMRC secure the payment from you in advance. Other points to remember: while advising Simon, you would not simply advise him to pay some of that 4,000. Reason: because along with that balancing payment for the previous year, Simon need to make his payment on account for the following year, as we say is. So this will be based on this 8,000 on the unpaid taxes. Okay, so you need to divide by 2, so that would be 4,000 each. So it's very simple things. Interest on the late payment of the taxes. Now, HMRC will charge you interest on any overdue taxes. Similarly, interest will be charged if either the payment on accounts are late or the final balancing payment is late. So the interest runs from 31st of January to 1st of February and is charged for 1 day, as the payment was due was 1 day late. Even if it's 1 day late, they would charge you interest. HMRC charge interest at the rate will be based on the central bank base rate plus 2.5%. Nowadays, the bank rate is high, which is the base rate is 5.25, so the plus 2.5%. So then the interest rate will be somewhere in the range of 7.75%. Here is an example. Simon has a tax liability for 2020-21, 15,000. PAYE deduction is 8,000. So income tax liability for one period is 7,000. And for 2021-22 is 8,000. So remember, because of the tax liability for 2020-21, he must have paid payment on account for 2021-22 based on that amount. So it means Simon paid tax. So here's the Simon paid tax for 2021 on the following date. On 31st of January, because of the payment on account, he made one payment of 3,500. So you divide the 7,000 divided by 2. On 18th of August, he made another payment. So remember, the first payment on account is on time. The second payment on account is 18 days late, which was due on 31st of July. And then the balancing payment, because for the 2020, 21, and 22, the income tax due is 8,000. So and then because of the payment on account, he need to make payment in advance. So then the balancing payment is late by 10 days. So you will calculate interest this way. Assume that in the past the rate was, because the central bank rate changed late, like recently, but the previous rate was 2.5%. So the first payment on account was on time, but the second payment on account was late. Second payment on account was due by 31st of July. So the interest will run from that date till he made the payment, so 18 days late. Also, the balancing payment was late by 10 days. So it's very easy. You can see the calculation. So 3,500 multiplied by 18. 18 is the 18 days late out of 365 days. Multiplied by 2.5%. That is the interest rate. And the balancing payment is late by 10 days. So 10 divided by 365. So in a year, we have 365 days. So it's counted on complete 365 days basis. So the total interest is 4.99. That is for the late payment of the tax. We discussed this. There is an interest. Also, there's a penalty regime for if you are late with the payment of the taxes. So where the tax due and is outstanding for more than 30 days after the due date, a penalty of 5% of the unpaid tax will be charged. A further 5% will be charged in respect of the tax outstanding for more than 5 months after the first penalty is charged. It's mean like 6 months. So it's mean the first penalty is charged 30 days. So the second penalty will be charged 5 months after the first penalty is charged. Finally, an additional penalty of 5% will be charged to tax still outstanding more than 11 months after the first penalty has been charged. Note that the payment on account paid late do not suffer late payment penalty. So be careful. Do not apply late payment penalty to payment on account. You only apply the late payment interest. Here is an example. Teddy, an employee, has an outstanding liability of 4,000 in respect of 2021-22 because of the capital gain he made during the year. He filed his tax return by the due date for 31st of January 2023, but did not pay the tax until 1st of April. Now, Teddy is late by 30 days. So Teddy will be liable to late payment penalty of 4,000 multiplied by 25% as the tax is paid more than 30 days after the due date. Okay, it's very simple. Here's another example. Teddy was due to make a payment on account in respect. Remember, we say is no payment, no penalty for the late payment in respect of payment on account. It's only accrue on the original amount. Okay, so on 31st of January and 31st of July, he paid 5,000 on 1st of July 2022, but failed to make the second payment on account. His final liability for 2021-22 was 13,000. He paid 6,000 on 31st of March 2023 and the remaining 2,000 on 31st of August 2023. His tax return form has been issued to him on time, so he has no excuse. So no tax has been deducted at source. No tax has been deducted through PAYE. Remember, we say is that although Teddy paid the first payment on account late, POA stands for payment on account, and failed to make a second payment on account before the final due date, this will not result in a separate penalties. So just be careful. So the tax now, there's another situation. The tax of 8,000 is outstanding more than 30 days after the due date, which will be 31st of January 2023. So the penalty charge will be 5% of the outstanding amount. Then he paid some of the amount. 2,000 was still outstanding. So that was 2,000 is late, which is outstanding more than 5 months after the first penalty was charged. So a further penalty will be charged on 2,000 at the rate of 5%. Note that separate payment on account paid late do not suffer separate penalty payment penalties. If there is a reasonable excuse, HMRC would accept your reasonable excuse. So if the return of payment was posted in a good time but arrived late or never arrived due to postal service disruption, or there's a strike, okay, or there are certain factors beyond the taxpayer control, if the taxpayer suffer serious illness or bereavement which prevent the taxpayer attending to his tax affairs in a proper time. So that will be a reasonable excuse if there's an illness of some close family member. So this would be considered as a reasonable excuse, or there's a postal strike, or there's a disruption in the postal services. However, HMRC will not likely to accept the following excuses as reasonable: pressure of work or other commitment, okay, except illnesses or bereavement on the part of the taxpayer. The tax return is too complicated to complete. It's not an excuse. The lack of reminder from HMRC, you can't say that HMRC did not send me a reminder. Not enough information available to the taxpayer. In this case, is a reasonable estimate should be used, okay, or should be made. Ignorance of basic laws. You can't say is I'm not aware of any tax law, or I'm not sure if I need to file the tax return. So that is not an excuse. Thanks for watching. I will be making more videos. Sorry, it's that these topics are extremely complicated. I try to make it simple, but just read through. They're not extremely hard either, but highly tested in exam. I have more videos available on the taxable benefit, exempt benefit, taxable income, exempt income, taxation of dividend income, taxation of interest income. Uh, I'm also making videos on corporation tax, inheritance tax, but it's taking a long time to prepare a video. Um, I work full time, so in the evening when I have time, I sit down and do this exercise to make sure that you understand the concept. If you have any comments or queries, kindly drop me a line or two. Uh, I'm happy to explain. If you have any question as well, I'm willing to answer your question. If you like my videos, you can subscribe for more videos. I will be making videos on other topics, for example, financial reporting, financial management, corporate reporting. Okay, so it will be on even on the basic accounting as well. If you're just a beginner, okay, my plan is also to make videos for the people who are just beginner. Thanks for watching. I'm wishing you a good night.